Here we have the current stock market analysis for SoFi Technologies Incorporated, stock ticker SOFI. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So here we can see that the share price itself continues to rocket higher. What we're doing here is we're going to look at a 2-hour price chart because we're sort of coming into a bit of an event risk here for this stock. We're starting to see the hype machine start to turn into full gear here for this stock. And what this has caused is a share price rally from the $6.75 area that is now threatening to retest these prior highs, which were posted during the end of August, roughly August 29 trading period. So this is a price level that we've been watching for this stock for quite some time. So what I'm going to do in this video is outline some important support and resistance zones so that hopefully traders do not get sucked into long positions at the wrong levels. And hopefully we can orchestrate and develop some profitable trading strategies for this stock going forward. So as we can see here, share prices are moving back into this resistance level. One thing that is starting to worry me about this price structure here is that we're starting to develop what would be considered to be a harmonic pattern. There's not enough time in this. I try to keep these videos very short. So there's not going to be enough time for me to discuss and go over what a harmonic pattern is. There are several harmonic patterns. This is essentially a series of Fibonacci retracement levels that can be quite powerful in terms of their predictive ability. And when I say quite powerful, I mean 85 to 88% accuracy going back through hundreds of years of historical backtesting data. So these tend to be extremely reliable patterns here. And I don't think that people are really going to want to hear what I would have to say about this because what is developing here, we're not there yet, but what is developing here is a bearish pattern. Essentially, what these look like is it's sort of a W-shaped pattern. The bullish inversion of this would be sort of an M-shaped pattern. But what starts to happen with these patterns is that you see this upward price movement, and they're typically characterized by these sort of excessive price moves, which is what we're starting to see currently. The reason that I call this excessive is because these candles are all exclusively green here. We see a couple of minor instances of some bearish candles that are forming here. But for the most part, this is really taking the elevator higher here. And when things start to move that much in one direction, I do think that people should start to get a little bit concerned about, the viability and stability of these trends. So I do want to just call attention to the fact that what could be developing at the moment here could be a bearish harmonic pattern. And this could start to develop even in the event of a resistance break here above $8.30. So obviously what we're looking at in terms of near-term event risks for this stock, is a movement from the Federal Reserve with interest rates. Obviously, that does have an impact on this stock, and it would be, expected to, create this type of price movement. But the question that has to be asked here is, when is it too much? When have we moved too far? One other thing that I want to point to here is the reading in the relative strength index, which is now clearly trading in overbought territory. Okay, so I don't mean to be Debbie Downer here or anything like that, but there are some bearish signals here that are starting to develop. We can also point to the fact that some trend lines here have been broken as well. But what we're looking at here is a relative strength index reading that has moved above the 80 mark. So anything that's above 70 would be considered to be overbought, and we're currently trading above 80. So we're starting to enter into extreme readings here for the relative strength index, and this would not be considered to be a short-term time frame. This is the 2-hour price chart. So these are just some things to watch out for here. I mean, I'm not saying that that the share price is going to zero or anything like that. But these W-shaped patterns, these harmonic patterns, tend to have a huge amount of predictive ability here. And given the fact that we're currently trading in overbought territory, and share prices themselves have seen almost no movement to the downside within this current trend wave higher, I just think that there are some reasons for concern here, and I don't think that people should really be buying into the stock at these levels. Does that mean that we can't move higher? No, not at all. I'm not saying that. And what I'm actually saying is that this projected price pattern here would actually suggest some additional price movement to the top side. But what winds up happening here when these patterns unfold, the way they're expected to play out is we see share prices break above these prior highs and then actually see a fairly significant price move lower. We did actually have a very good example of this recently. Anybody that's been following my videos on GameStop, we saw an extremely good example of a W-shaped bearish harmonic pattern that played out for GameStop right into the last earnings release. So the timing of the entire situation was beautiful as far as predictive price abilities are concerned, and that share price completely collapsed through the floor. Now, I'm not saying that GameStop and SoFi are the same company. They're obviously in very different situations. From an operational perspective, they're in completely different industries. I'm not comparing these two companies, but what I am comparing here is the development of a similar price pattern. If anybody wants to actually see how those price patterns can play out, the recent example in GameStop is basically a textbook example of that type of situation. We did even see share prices break to new highs in that stock above $25, and then share prices just completely collapsed back below the $20 mark. So in percentage terms, that was a huge price movement to the downside, just as the market was starting to get extremely optimistic, and things were going to the moon, and we're seeing short squeezes and all this stuff. It doesn't actually wind up working out that way. Those are sort of baseless expectations. So, I'm not saying that the situation is the same thing here, but what I am saying is that we are starting to see a very similar pattern that is starting to develop with share prices moving into overbought territory, and the potential for a buy the rumor, sell the news type of situation here. With the Federal Reserve and this interest rate decision. So whenever you start to see people getting extremely optimistic about something, it's often time to start looking in the other direction. That's definitely not the type of scenario that I like to play from the long side. I do try to be a bit more of a contrarian as far as the market is concerned. If everybody's looking in one direction, I try to then start to look in the other. So here's the current stock market update for SoFi Technologies Incorporated, stock ticker SOFI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.